Kerala-based Dhanlaxmi Bank, which is a private bank, saw some drama unfolding at their AGM today when shareholders voted against the appointment of Sunil Gurbaxani, who is the newly appointed MD and CEO of the bank. Now, Sunil Gurbaxani was appointed the MD and CEO with effect from February 27th. He was appointed as MD and CEO for a period of 3 years, but 90% of shareholders voted against his appointment. Specifically talking about the reasons behind why this could have happened, it goes back to a letter written by the All India Banks Association, Banks Employees Association, to the RBI. They had asked for urgent intervention by RBI in the day-to-day dealings of the bank. The situation is similar in terms of what happened at the AGM to Lakshmi Vilas Bank. We saw the shareholders of Lakshmi Vilas Bank rejecting the reappointment of 7 directors on the board of the bank, including the MD and CEO. But Lakshmi Vilas Bank is in a financially weak situation, and in contrast, Dhanlaxmi Bank is in fact in a financially sound situation. The bank has been profitable for the last 9 quarters. So what were the concerns that the shareholders could have had? Now, first of all, there are around 3 shareholders which make up more than 20% of the bank's holding. These are individual shareholders. They hold more than 20% stake in the bank. So they also have strong views in favor of what AIBEA has written to the RBI. According to reports, AIBEA has said that there is urgent intervention required because the top management's plans for the banks are not in line with what the shareholders want. The top management is looking to open more branches in the northern states of the country. And that is not something that the shareholders want, because they want it to be a South India specific bank. It will also mean that the other branches opened across the country may not have enough supervision, which may affect the profitability and the financial situation of the bank. Now, there are also some other issues relating to increasing in the authorized share capital of the bank, and what the shareholders want is that it should be done via a rights issue, while the top management is trying to push for the increase in authorized share capital via a QIP. And this is another concern, mainly because this QIP is likely to be done with funds based out of Mumbai, with companies based out of Mumbai, as per reports. So a lot of shareholders were against what the management was doing. That is another problem that has led to what has happened today. In fact, on September 28th, RBI had appointed D.K. Kashyap on the bank's board. D.K. Kashyap is a general manager at RBI, so the reason for this appointment is not known. Maybe we could say that it was a preempted decision by RBI because they knew what could transpire at the bank's AGM, especially after what happened at Lakshmi Vilas Bank's AGM. So this tussle between the shareholders and the top management has led to this situation where the bank's MD and CEO's appointment has been rejected. Now we have to see as to what RBI does in terms of whether they step in and appoint another MD and CEO, who they ensure will take charge at the bank, and will that be in the interest of the shareholders. But financially, thankfully, the bank is in a stable condition.